Hi there, welcome to Kneppy Invests. I need your help. Desperately need your help. Ever since I had this light bulb moment in the shower this morning. The end of the financial year is just one day away as I'm recording this video on the 29th of June, just before end of trading. And over the past 10 months or so, I have been tracking the performance of one of my portfolios to the benchmark or the market, and it's been doing splendidly well. So I decided as the new year rolls into being on July the 1st, what I want to do is track that portfolio to my other portfolio, the long-term buy and hold portfolio, which is a strategy I've been using ever since I started investing. Today in the shower, I had this light bulb moment. Why not only track these two personal portfolios? What would happen if I asked you, the viewer of my videos, to tell me what your three favorite stocks, and then I get a group portfolio of all your favorite stocks? How would that portfolio perform to my other two personal portfolios and the overall market? I'm thinking right now that group portfolio consisting of your favorite stocks would outperform the market and my two personal portfolios. So in this video, I'm asking you to provide me with your three favorite stocks on the ASX. Before I go further into detail, I just want to go through the reasons why I am doing this. When I started investing well over 10 years ago, it was all about long-term buy and hold. You find a company you think will succeed in the long term, and you just hold it for as long as possible. This is the sort of investing strategy that the experts will tell you outperforms every other sort of investing strategy there is. And you hear all sorts of stories how old men who have died have held the one or portfolio of companies through the last 50 years, didn't sell a thing, and they've turned out to be multi-millionaires and didn't even know it. I have dabbled in small caps and speculative companies during that period, but it was only small amounts. At times I was seduced by the story of these speculative and small caps. In that end of the market, marketing or salesmanship is very important. You need to sell the story to the investors and the fund managers. Once you get into the mid caps and the large caps, the marketing, selling the story is not quite as important. You just let the financials of the company sell themselves. And that's how I was back then. It was all about the financials of the company. As I am a curious person, I do like to learn. So even though that was the sort of strategy that I was told would outperform the market and give you the best returns over the long term, I did a lot of reading, particularly about technical analysis. I also learned about value versus growth. When I started investing, I just sort of lumped the value and growth into the one basket. It was all about profits, all about the financials, and most companies will grow over the long term. So I just, lumped those two together. Most of my learning was all about technicals, and then I started to dabble in technicals, and every single time I did dabble about short-term trading, it was successful. And the more times I did it, the more successful I was. It was all based off a sentiment and momentum strategy. And then in the past year or so, in year number 10, I decided to test that short-term sentiment and momentum strategy against the market and against the benchmark, and it has performed quite well. In fact, it's doubled the market returns since August 2020. That is the history of my investing philosophy, and I'm always wanting to find ways to really supercharge returns. And I think potentially, if we're going to get a group consensus, a group portfolio, that could even further supercharge your returns in the long term. So that's the whole point of this video today. My original idea before I had this light bulb moment in the shower today was to track the performance of my two portfolios against a benchmark. And since the 1st of July, the start of the financial year was upcoming, I thought naturally enough I'll do it from 1st of July 2020, track the performance of both of these portfolios against the benchmark, put $100,000 in each, not add any funds to either portfolio, and just track the performance of each over a multi-year period. Those two portfolios are my long-term buy and hold. That is the strategy I've been using since day one as an investor. And then the second portfolio, which is the short-term sentiment portfolio, which I've been using more and more over the past few years. My hypothesis when it comes to performance of these two portfolios is as follows. I believe that the short-term sentiment portfolio will beat the long-term and buy and hold portfolio and the market over a multi-year period. So I'm not talking about months, weeks even, or 1 year. I'm talking about 5 years. Hopefully I'll be able to do this experiment over a 5-year period. That's a long time, but who knows? You just don't know what's going to happen in 5 years. And this sort of tracking against the benchmark needs to be done over a long period of time. Just 1 year in itself is not enough to see what sort of strategy wins out. We've seen that with fund managers in the past. Kathy Wood with her ARK Investments is sort of the talk of the town right now, but she hasn't been beating the market over the last 10 years. It's only been a very short period of time. It's those fund managers who can consistently beat the market over many, many years. They are the best sort of fund managers, like Warren Buffett, who can consistently do it. One particular fund manager might beat the markets amazingly well in 1 year, but if they can't repeat it in following years, that means they aren't a very good fund manager. You need to track them over a multi-year period. Hence, I think about 5 years is a good time frame for this experiment. Every day there's a bit of trading going on in the markets and I'm not working. I usually do a video just after markets open. So as soon as markets open, I just detach myself from the share price movements of any companies. So a good way to doing that or detaching yourself is just to do a video. Today, that video I was going to release it this afternoon on the 29th of June, but I decided to release it tomorrow on the 30th of June. Because as I was having a shower, this thought popped into my mind. I'm tracking the performance of my portfolios to a benchmark. And it did hit me, what would happen if I got together all the thoughts of a group of investors together and we built a portfolio of what we thought were the best long-term buys on the ASX? Would that group portfolio of all our best collective ideas, would that group portfolio beat my two personal portfolios and the market? And that's the question I had in the shower this morning, and I think I do know the answer. I'll get to my opinion in the next slide, but how will this all work? How am I going to choose 25 companies on the ASX? So I'm going to choose 25 and put $4,000 worth in all those 25 stocks, totaling $100,000. I want you, the viewer, to provide me with 3 of your favorite long-term ASX stocks in the comment section of this video. They can be any company on the ASX. They could be CSL, NAB, Commonwealth Bank, or that $1 million company that no one knows the name except yourself. They can be miners, biotech, anything. What are your 3 companies you think will outperform the market over the next 3 to 5 years? Leave those 3 companies in the comment section of this video and number them 1 to 3 with your favorite company out of your 3 companies at number 1, second favorite number 2, and third favorite number 3. I will then choose 25 ASX stocks out of the lists or the list you provide me based on the number of times a company is chosen. If CSL is chosen 5 times and no other company is chosen at least 3 times, CSL automatically gets put onto my list. So if numerous companies gets chosen more than once, those companies more than likely will be put on the list. Then, once I've exhausted all those companies that have been chosen multiple times, I'll go down the list of number 1s and just put them onto or into the portfolio. The way I'm going to do this is the first person who replies will be number 1 on my list, and I'll go down the list of all the number 1s from then, and then if they're all exhausted, I'll go down the number 2s until the 25 stocks are found. Once I've chosen the 25 companies, I will not sell any of those companies throughout at least this year and hopefully over the next few years at least. That is the plan at this point in time. And how do I think all this is going to play out in the long term? Well, I'll tell you my opinion in the next slide. In my opinion, the group portfolio will beat my personal portfolios and considerably beat the market returns over the next 3 to 5 years. The reasoning behind that is quite simple. It's all about idea generation. And if you can get a group of investors together, work together, and just bring forth their best ideas, more than likely that collective ideas of a group of people will have the better chance of success in the long run. So I think this has, say, a 75 to 90% chance of beating the personal portfolios. And I think it has about a 95% chance of killing the market in the long run. So what are you waiting for? Go into the comment section of this video and provide me with your 3 favorite ASX stocks that you think will outperform the market considerably or so over the next 3 to 5 years. I want your list by 10 a.m. on Thursday, the 1st of July. And at that point in time, I will collate a list of all your chosen companies and then create a portfolio, a group portfolio from that list. And then over the next 3 or so years, we'll be able to track the performance of that group portfolio against my own personal portfolios and the market. And hopefully, and in my opinion, it will considerably outperform the market. I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.